Hi there, welcome to Kneppy Invest. We are almost in reporting season in regards to financial year 22 results, and those results typically come out in August. Now, not all companies are on the same reporting season. Some companies report their half year results in August, some companies report their full or half year results in May or November, those sort of months. But the majority of ASX companies will report their 4 year results in August. However, there is one company that releases their 4 year results just before August begins, and that company is Korvest. This company traditionally releases their 4 year results the first week before or the last week of July. Now, Korvest has released their 4 year results a little bit earlier than expected. In fact, Korvest released their results on Friday at 5 p.m. So that's July the 22nd. Typically, if a company releases any sort of announcement like this, any sort of financial news, at 5 p.m. on a Friday, you should expect some bad news. So the question is, were these bad news? Were these bad results from Korvest? And I do have the question whether Korvest could be considered cheap right now based off these results and based off the valuation. So I'm giving it away that these results aren't bad. In fact, they're the complete opposite of bad. They're actually quite good. Now, Korvest has been around for a long time. In fact, they've been a listed company on the ASX since 1970. Yes, they've been a listed company on the ASX for 52 years. So you might expect for a company to have been listed on the ASX for 52 years that they actually do have a quite high market cap. Yet the market cap of this company is less than $100 million. So you probably could argue that over the last 52 years, they haven't grown all that much. So just remember that when you look at the growth numbers for this particular financial year. So perhaps, and this is just a perhaps, they have hit a really important inflection point, and it's just taken them 52 years to hit this inflection point. So what does Korvest do? Now, Korvest has two divisions, EasyStrut and Korvest Galvanizers. EasyStrut is a leading range of cable and pipe support systems. You might think that cable and pipe support systems are manufactured with steel, and that's where Korvest Galvanizers comes into play. And actually did mention in some of the commentary that the tailwinds that EasyStrut has experienced really helped also the Korvest Galvanizers division as well. So the main thing I was thinking in regards to Korvest over the past year is the impact of increasing zinc prices, because galvanizing is all about applying zinc to steel to help or to stop those steel products rusting. And I have been questioning whether the increasing zinc prices could perhaps affect Korvest's business. But we'll have a look at the commentary later in the video, and it seems like they can pass on the increasing in zinc prices, the increasing in supply prices onto the customer, and that's why the company has experienced a really good full year. Now, that also is suggesting that this company has pricing power, and that's very important in these times where we are experiencing high inflation. Now, before I have a look at their full year results, let's just go back to 19th of May. Last time Korvest released some profit guidance, and this profit guidance was in regards to profit before tax. And they are expecting, or they were expecting at this point in time, profit before tax to be in the range of about $16 million. So the question when we're talking about Korvest's full year results is how their results are different from their guidance. If there's no difference from guidance, then realistically there shouldn't be any impact on the share price. So let's have a look at the full year results. And I am recording this video 20 minutes after trading has begun, and the share price of Korvest is actually up 10%. So does that mean that their results actually beat their profit guidance from the 19th of May? Now let's have a look at the financial year 22 results for Korvest. First statement I look at, and when I see a financial year announcement or release from a company, I skip through all the commentary, skip through the press release, skip through the presentation. I go straight to the financial statements, and I always start with the cash flow statement and then work my way back. Now, I never just look at the cash flow statement because you can be misled if you just focus on this one statement, or if you just focus on the balance sheet, or if you just focus on profit and loss statement, you can be misled. And it actually is, when you look at Korvest's cash flow statement, the question about whether you can be misled or not be misled just by looking at this one statement is really evident when you look at Korvest's cash flow statement, because there are possibly some troubling signs for the company in this statement. So let's have a look at the cash receipts from customers, increasing from 76.6 million to 110 million. So that's going to translate to revenue. Revenue is going to climb. So this company has experienced some really good growth when it comes to cash receipts revenue. So that's a really good sign for the company. But the really notable thing here in the cash flow statement for Korvest is the decrease in net cash from operating activities actually fell from 6.5 million to just below 4 million. So that did really pique my interest in not a good way in regards to Korvest. Now, they did have to pay almost double amount of tax in this particular financial year. So if we take away the tax, cash generated from operating activities still fell from 8.7 million to 8.1 million. But again, you can't look at this particular statement in isolation. And that's where the balance sheet comes into play. So as we now pay attention to the balance sheet, the three things I'm really looking for here is changes in inventory, changes in accounts payable, and accounts receivable. So in a way, I am looking for changes in working capital, and that's going to have an impact on the cash flow statement. So if we actually see an increase in changes in working capital, so if inventories really ramp up, if accounts receivables really ramp up, so current assets are really increasing at a greater rate than current liabilities, that means that is a cash outflow, and that will have an effect on the statement of cash outflows. Or cash flows. So let's have a look at the balance sheet right now, paying particular attention to inventory, accounts receivable, and accounts payable. So here is Korvest's balance sheet for financial year 22. And the thing I'm looking for here is any discernible changes in trade receivables, inventories, and trade payables from last year. And there is a major increase in inventories for Korvest over the past year. For instance, in 2021, inventories were at 12.4 million. In this year, or end of this year, they were $20.5 million. That means they have $8 million more in inventory at the end of this year than last year. And the best way to look at this is if they maintain inventory levels at $12.4 million, that means they'll have an extra $8 million of cash on hand. And the end of year, they would have about $11.5 million of cash on their balance sheet. And that would also have an impact on the cash flow. So increasing inventories is a cash outflow. So again, this has an impact on the cash flow statement. The other thing here is trade receivables actually increased by $2.7 million, while trade payables only increased by $800,000. So the trade receivables increase is again a cash outflow, while that increase in trade payables is actually a cash inflow. So there is significant change in working capital for Korvest, and that has an impact on the cash flow statement. So you've got to look at the cash flow statement and the balance sheet hand in hand. Just don't focus on the cash flow statement. Now onto the profit and loss statement for Korvest. This is the last financial statement I look at. I would assume, and sometimes when you do assume, you could make an ass of you and me, but I would assume a lot of investors would only look at the profit and loss statement. They're probably only concerned with the profit a company has made. And for Korvest, we have seen a significant increase in profit. From last year, it was 6.1 million to $11.3 million this year. Remember that guidance the company gave on the 19th of May? It was all in regards to profit before income tax. They expected that to be around 16 million, and they hit that 15.9 million. So really, these results were not or should not be a surprise to the market. Yet the share price for Korvest is up 10% on the opening this today on the 25th of July. So there were some participants in the market who were pleasantly surprised by these results. And down the bottom, they do give us a basic earnings per share and a diluted earnings per share, and both of those around 98 or 99. Now, the share price of Korvest right now, after open, is about $8.20. So the PE ratio of this company is less than 10 right now. So the question of whether this company is cheap is based off whether this company can continue this momentum going. Because if we look at last year, earnings per share was just above 50 cents. So I think there are probably some people in the market who think this could be just a one-off. The tailwinds this company has experienced in the past year won't be there in the next year, and we'll see profit levels come down, earnings per share come down. If they can continue rising or raising their profit levels, raising earnings per share, there is no doubt this company is real cheap at these levels. Now on to note 15, and I love how Korvest has done this because this is a reconciliation of cash flows from operating activities, and you see very similar cash flow statements in American companies where they start at profit and work their way back from profit to net cash from operating activities. The reason I like this compared to the way Australian companies do it is you can see changes in working capital in this particular way you do a cash flow statement. So right down the bottom is changes in trade and other receivables, changes in inventories, changes in trade and other payables. And if you see a bracket around any of those numbers, that means that's a cash outflow, and that will have an impact on the cash flow statement. For instance, in the past year, they've spent $8.1 million on extra inventory from last year, and that has an impact on the cash flow statement. Now, I'm not sure exactly why Korvest has significantly spent a lot of money on inventories. It could be for a number of reasons. For instance, supply chain issues. They just want to make sure that they are able to help any customers who come to them and want their help. Or they could be expecting increasing business in the next year, and that's why they've increased their inventories. And if they do have an increased business in the next year, that could be really beneficial for further growth in this company for financial year 23. Another thing I like to look at is just the commentary that the company spits out in either their presentations or any sort of press release the company gives. And the reason I like to look at commentary is just to get a feel of how management are thinking, because you can get a feel of whether a company's management is bullish or bearish without the company actually saying whether they are bullish or bearish. Now, if we start with COVID-19 impacts that have had on the company, if you just read this part of their commentary, you might come away thinking they're fairly bearish because COVID-19 has had an impact on Korvest in relation to supply chain issues, and also COVID infections have had an impact on their labor. For instance, they mention here, Korvest experienced workforce disruption as staff isolated due to infection or being close contacts. The availability of casual labor became increasingly difficult as the year progressed, resulting in extended lead times and significant overtime requirements. So you might expect that could have or should have had a negative impact on the financial performance of Korvest. Now to some positive news from the company in regards to EasyStruct business. It did perform very strongly throughout financial year 22, but I am hesitant whether EasyStruct business, this momentum this division has experienced, can continue into the next few financial years based off this one sentence in the commentary. 4 major infrastructure projects were supplied during the year, whereas historically only 1 or 2 major projects are delivered in any 1 year. So if they go back to more historical levels in financial year 23-24, we could see a significant decrease in revenue, cash receipts in financial year 23. So that is a question, or one of the questions I do have. Another question I did have is whether Korvest is a price maker. Can they pass off price increases or input price increases onto the customer? And the final sentence in this bit of commentary was very important in answering that question I did have. Significant input cost increases, particularly for steel and freight, were experienced during financial year 22, and these were passed on to customers through price rises applied in August and December 2021. So it's very important that this company can pass off these price or input price increases onto the customers. That is actually one question I did have in regard to Korvest. In the next bit of commentary, 2 of my questions were actually answered here. The first question is how important is the success of the EasyStruct business on the galvanizing business? And actually do mention here that the significant increase in Easy Strut project work drove the higher galvanizing volumes as all the projects supplied during the year were galvanized products. So it seems like the tailwinds behind the Easy Strut business also translated to some tailwinds behind the galvanizing business. So that also means if Easy Strut business struggles in financial year 23 or financial year 24, the galvanizing business might also struggle. The second question I had was in regards to increasing zinc prices, and they answered my concerns around that. Price rises to customers were implemented during the year as a result of the increased price of zinc. The cost of zinc rose rapidly during the year and peaked in price where the cost of zinc was 66% higher than financial year 21 average. This has resulted in significantly higher value of zinc on hand despite little change in quantity. So again, they're able to pass on any input prices, increase in prices onto the customer. And that is very important for any company moving forward, particularly in a high inflation economy. Now let's have a look at some of the financial history of the company. First, looking at revenue here, going back 15 years, not going all the way back to 1970. And the company has had stages of good growth, stages of decreasing growth. So this company did experience some problems between about 2014 and 2017. In fact, revenue dropped from 74 million to 44 million, increase in competition. There could be other reasons why the company was experiencing problems during that period. And probably the best time to buy this company was back in 2017, 2018, because of the perception that this company was experiencing some problems, which it was. But the company has doubled or more than doubled their revenue over the past 6 or 7 years from 44.7 million to 99.2 million. The question is, will this growth continue in the future? Now, the record, well, I don't say record yet, but I think financial year 22 revenue of 99.2 million more than likely is a record year for this company. And if they can continue this momentum over the next few financial years, I think this company is looking like good value right now. But I still have questions around the financial performance of Korvest in financial year 23, even into financial year 24 and 25. Now let's have a look at the history of profit, cash flow from operations, and changes in net working capital. And over the past 15 years, Korvest has been profitable and has experienced cash from operations or positive cash from operations in 14 of the 15 years. The only year the company was unprofitable and had a net cash outflow from operations was in 2017. So this was by far their worst year this company has experienced in the last 15. You'll be able to see that when we look at the chart. But the company looks like they have turned things around over the past few years in quite a significant way. And there's little doubt that the best year this company has experienced is financial year 22. Now let's have a look at the chart for Korvest. This is the weekly chart going back to 2012, so 10-year chart here. And remember, this company was experiencing some problems between about 2014 and 2017. So it should be no surprise that's the period where the share price decreased from about $8 all the way to a low of $2. The share price actually leveled off or consolidated between about $2 and $2.75 for about a 3-year period. It hit $2 on 3 separate occasions, or just shy of $2, in 2016, 2017, and then in the middle of 2018, before the share price started to rise as the market became aware the company was turning the business around, or the company was turning around. And that's why we've seen the share price move into a well-defined uptrend. Share price has increased from $2 to a current share price of around $8 to $8.20. Now, the share price high over the past 10 years is just above $8.20. And as I'm speaking, the share price of Korvest is $8.20. Share price has increased 10% after these financial year results have been released. So we are at almost a 10-year high when it comes to share price of Korvest. And that should be no surprise because this company has just experienced their best financial year on record. The question the market has or should have, and I have, is whether they can continue this momentum moving forward over the next few financial years. That's all I have for this look at Korvest's financial year 22 results. The question whether this company is cheap is an involved one, not a simple question to answer. If you just look at their financial year 22 results, a PE ratio of about 8 or so might suggest this company is looking cheap just based off their financial year 22 results. But you would have to assume that they could continue this momentum moving forward. And there are some questions around that. But there are also some positives. I really have figured out that this company is or has pricing power. If this company sees an increase in their input costs, they can pass that on to the customer. And that's very important because I don't know if we're going to see an extended period of high inflation. And if we do, Korvest will be able to overcome that. So if you have any questions, thoughts in regards to Korvest, I'd love to hear it. So leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.